I only trade one setup, and I'm going to show you exactly what I look for every single day. The entry model I use are IFVGs, also known as inversion fair value gaps, and these are the three main steps to this entire strategy, and I'm going to explain how simple they are. First thing I look for when I open the charts is to find my bias, and it is extremely simple. A lot of people tend to overcomplicate it, but these are the two things that I look for every single day. So the first thing is, what are we respecting and disrespecting? So if we are respecting high time frame bullish PD arrays and disrespecting higher time frame bearish PD arrays, I am then convinced to see prices higher, and the same goes for the other direction. If we are respecting higher time frame bearish PD arrays and disrespecting higher time frame bullish PD arrays, then I am open to see prices lower. A lot of traders tend to only use this side of finding your bias, and it ends up burning them in the long run. So what I've implemented into my strategy, or the strategy that I use, is finding a conditional bias. So this is more of a if this then that scenario. So for example, if we respect this 1 hour or 15-minute bullish fair value gap, I am open to see prices higher to our draws and liquidity, and the same goes to the other direction. If we respect this 15 or 1 hour bearish fair value gap, I am open to seeing prices targeting our draws and liquidity. And this is only applicable if we have clear draws above or below. The next step to this very simple strategy is higher time frame manipulation. So I'm going to be going over the best types of manipulation to see. These are my top three, but there's definitely more that I'm 100% missing. But the first one is any significant high or low inside of a higher time frame PDA. So in this case, let's say this is London session high inside of a 1 hour fair value gap. If we come up and sweep this high and we have draws on liquidity lower, very likely to see price distribute to those draws on liquidity. The next one is unmitigated higher time frame fair value gaps, or PD arrays. And in this case, we had an unmitigated 4 hour up here, come up, manipulation, then distribute lower. The last one is my favorite, if not everybody's favorite, and it is discounted higher lows in higher time frame PDAs. So the discount is from our range high to our range low. It is that 50% mark of that range. And if we have a high inside of a higher time frame PDA that we manipulate, that shit is bread and butter, and it will distribute almost every single time. The last key to this very, very simple strategy is having a clear draw on liquidity, and this is the most important part of the entire thing. If you don't have a clear draw on liquidity, you don't have a setup. Coming up first on the left, we have data highs and lows and equal highs and lows. So what a data high or low is when we have high impact news, we will likely leave these larger wicks on the upside or the downside, and this is a very clear draw on liquidity because price tends to rebalance these as its first objective of the day. Second, we have these equal highs. You can kind of put this together on your own. It's very, very straightforward. It is when we have a high that then gets manipulated to but doesn't fully surpass it and has an equal high. Price will likely remanipulate this level to fully take this to then distribute lower. Next, we have session highs or lows, or previous day highs or lows, and trend line / low resistance liquidity. So a session and a previous day high or low, very straightforward. Previous day is when it's the previous day's highest point or lowest point, very clear draw. Session high or lows is when, let's say during London session, that highest point of that session or the lowest point of that session are very clear draws. And here I have an example of trend line / low resistance liquidity. This is something you'll see every single day on the charts. This is when we stack highs or lows in a perfect fashion like this. We will likely manipulate / distribute to the top. Last but definitely not least, we have unmitigated fair value gap. So this is any higher time frame fair value gap that hasn't been manipulated into. That is what unmitigated means. And typically we would target a unmitigated 5, 15, 30 minute or 1 hour or 4 hour. And now finally getting into the execution of this entire setup is just finding the highest time frame inversion fair value gap of the manipulation leg, ranging from our 15-second to our 5-minute inversion fair value gaps. So that right there is a simple description on exactly how I trade every single day with this strategy that has a 70 to 75% win rate when traded correctly. You need to stop strategy hopping and just use this extremely simple model every single day. Just a little disclaimer, this is not my strategy that I invented. It is simply just a bunch of ICT concepts mushed together to just give you easy wins every single day. Follow me for more tip videos just like this one. If you made it this far, comment cheese to show me that you're a real one.